Good morning, good afternoon, good evening, good night, wherever you are, whenever you are. Welcome to a new Breakout Solutions Bitcoin technical analysis video. Now, I do want to apologize. I am 4 hours late for today's live stream. So for you faithful viewers, I do apologize that you're not seeing this at the usual time, but I do promise to hopefully be back at the same time, the normal time, as of next week. So without further ado, now that that's out of the way, let's jump into the charts. Now, in the past, I've actually haven't had any of these drawings, and I've made things pretty simple for you guys, watching at home, listening, maybe trying to learn how to do some technical analysis, etc., etc. But I thought today that I'm going to show you guys how busy my chart is and talk to you through some of the things that I can see on my chart that you guys hopefully can start learning a little bit more about, and then hopefully put into practice with your own technical analysis. So basically, you'll see a few different colored lines on here. You have in blue, which is a daily resistance level. Another blue is the naked point of control. So that is where Bitcoin gets traded the most amount in a single day. That's usually called a point of control. You tend to move the following day up or down below that point of control. And if we don't go back up and re-tap it the following day, it becomes what's called a naked point of control. So at some point in time, we like to think that price will go back to that price if it's up or down to retest it, see if it's support, or if it's above, see if it's resistance, and then we move forward. So I put them basically in the same color because they're the daily color. In yellow is a weekly support or resistance line. In purple is a monthly. If I zoom in here, you can see it says monthly here. And then we have, I mark them all out. So when I'm trading, especially on the macro, I like to have all the lines to see, so below us, we have 21,779 as support, and also 21,000 and 20,900, right? So this is where I'd be looking for Bitcoin to come down to and bounce from. If we do break down from here, I do think we're going to come down. Maybe we just wick below this sort of trend line that we have and then push back up. And if we don't, where I'd see, firstly, see a bit of weakness from Bitcoin is this Fibonacci retracement from this local peak here on the 1st of March to the current low. So if I click on it, you can see, maybe I need to do that. There we go. So we have the monthly and the Fibonacci golden pocket above us at $23,138. So that'll be the first test. Is that going to continue this series of high, low, lower, high, lower, low? Do we then make another lower high? That's where the bears are going to probably try and fight the most to create that change in market structure from the current, bullish structure that we've been on for the last 2 months now. Let me go to 2 days. All right. So over the past 2 months, all right, we created a low, a high, a higher low, a higher high, a higher low, higher high. We want this to remain a higher low so we can continue the macro bullish structure on the shorter time frames. So not too, not as long as this sort of time frame, but on the short time frame, as I just pointed out, we're in a we're in a bearish market condition. We've just printed a few lows, lower high, lower low, as I just said. But in the macro, we're still looking good as long as we stay above these lows right here. If we stay above these lows, that's good. But if we break below that, then we're going to have a bearish market structure from the macro standpoint. So how high do we come back up here? And then do we make a lower high and continue lower? I don't think so at the moment. I think Bitcoin does look good, but I just wanted to point you guys out to those two differences. And these lines don't want to, they don't want to remove themselves. All right, cool. So What am I looking at in the short term? Well, I actually do think Bitcoin is primed for a little bounce. It might retest, as I said, this green trend line again, or maybe even this weekly and daily here at 21.7. But I do think we should see a move to the upside before breaking these lows. Now, why do I say that? A few things. Yes, the stochastic. Let me go back to the daily. Let's start on the daily. On the daily, on Market Cipher, we're still in the green money flow, which is great because whenever we do get a green dot on when we're in green money flow, that usually does mean a good pump and reversal. The MACD printed a light colored histogram. We talked about this last week where it would have been really bullish to see these two moving averages cross over above the zero line. Unfortunately, that did not happen. It could still happen, but this blue line has now gone under the zero line, so it's very unlikely that we cross above because, as I mentioned last week, that would be super, super bullish. If you look back in history of daily and MACD crosses above the zero line, like what we saw back here, price pumps dramatically. So we already had this pump. We do now, however, have this divergence, which has technically played out. We've created a higher high in price, lower high with the MACD, lower high with the stochastic. But what makes me think that we should get a price reversal? Well, here we go. On the daily, the stochastic RSI is back to these lower levels. So what goes down must come back up. So we are technically oversold now, and we should see a reversal in the market. So I do believe that's why I do believe we're going to get a bounce here. But do we then come back up, stay back down, and do a secondary drop? So then the price action would be something like this: boom, boom, and then maybe again. So we'd have to see what happens here, because you see here, back in the last one, we crossed down, crossed back over, crossed down, crossed back over, and like we had a few dips. If you follow the price action to all those crossovers, we could be in for a bit of a rocky ride here in the short term. We always tend to see when we come down to the bottom, we tend to have two goes at the bottom. We do like a W. There's a mini W there. There's another W there. There's a W there. Every time, look, W. So once we cross positive, bullish, we're still going to probably, like I said, come back down. So that's why I expect still some choppiness in the upcoming future. But I still think that we should continue to the upside. We are in this ascending, broadening wedge, which is technically bearish, but do we break down now, or do we have one more pump to 28K, come back down, and then we do something like this, and we chill out for a few months, and then we start the 2024 bull run. Well, it'll be 2023. I think we'll start at the end of this year, but definitely something's going to happen big in 2024. Alrighty, so I think I've been going for long enough. Like I said, I do see a bounce here. Daily stochastic is low. It needs to, even if it's just a small pump, I do think we go up before we break this green trend line. And if I go on the lower time frames, I mean the 8-hour MACD looks like it wants to cross, which is good. That's positive. But you can see, look at those moving averages. They're wanting to do a W by the looks of it. And then on the 4-hour, stochastic is in the overbought territory. So look, yeah, maybe we do break this, because on the short-term time frames, things are looking bearish. But the same way that we do these W's on the bottom, we can also do them on the top. They go, or we call them M's. So boom, M, bit of an M there, a couple of M's there. So things can turn around quite quickly. On the daily, we can, on the hourly, we can see the money flows coming from red to green. So that's why I think we should get a little bit of a pop-up. The stochastic seems to have found a bit of resistance at the 50% line, but if it does break through, we'll see continuation. So we'll just go come up to this golden pocket, which I think is going to be our first point of resistance, and then we see what happens. But we can't see on the divergence indicator, new indicator that I'm been using. We haven't had a bull signal on the 1 hour or the 4 hour. So probably one more swing of the lows to, so I can see us. My dog must be naughty. Don't know if you guys heard that. But we might have another swing of these lows to create a bullish divergence on the higher time frames, because as I just mentioned, we don't have any bullish divergences on the 1 hour or the 4 hour. So therefore, things don't look like pumping anytime soon. It's probably a little bit more sideways. Lastly, Yeah, that's what I wanted to cover. Okay, so one of these indicators is the SVP-HD. Let me just quickly show you guys what that one is. Session volume profile HD. I spoke about this at the start of today's video, how every day you will tend to see, let me go to the 1 hour, it'd be a bit clearer. So these boxes are 1 day. Let me bring out a box. Where's my, there we go. Right. Okay, so for example, this was yesterday. So this entire box was yesterday. This is the day before. So I didn't get this one perfect, etc., etc. So every time we see boxes, that's an entire day. And inside that box, all right, inside these boxes, you'll see a few important things. Now, we see this red line, that is the point of control. So where Bitcoin, the most amount of Bitcoin was traded in volume. Okay, so when we form these points of control, as I mentioned, if the following day we move up, like what we did here, here's a good example. So you can see right on the close of this day, we pumped, and therefore we were above the point of control. So this was technically a naked point of control. We came up here to some resistance. I don't know if it was a fib, but I'll have to look at it later. And then we came back down. We did go below the point of control, but we did basically feel, you know, we feel the nakedness of that point of control, basically meaning it was tapped, it ended up being support, and we move on. So points of control are kind of like support lines. So the reason why there's one here, if I go to an 8 hour, is we had a trade, the last trading day here in this sideways consolidation. We can see this trading day here. The point of control was at 21,740. The next day we've pumped. We haven't then come back down to confirm this as support. So this becomes what's called a naked point of control. And these become support or resistance if they're below. So right now this point of control is still below, hasn't been tapped, meaning that the price could come down, tap this point of control, and then move to the upside. So hopefully we see that. This was also a naked point of control, but you can see that we came back to that point of control. Let me draw my horizontal line. See this week right here? So that week was a retest of this naked point of control, which ended up being support, boom, and then we pushed to the upside, right? So we went up, you know, we went up 5% from this naked point of control. They're very powerful. They're things that you should mark out after each day of trading has closed. Where was the previous day's point of control? And other things you also want to pay attention on these candles or these values is you'll tend to see the value area high. So you can see the dark colored or like bright colored candles. So that is the value area. So we have a value area high, which is where the bright colors meet the dull colors, and where the lowest bar and the dull colored ones below becomes the value area low. So they're also interesting because when you're in a trading range like this, right, you'll tend to see price come up, hit the value area high, come back down, hit the value area low, value area high, value area low. As you can see, look at this, it was actually perfect. So I'll mark out the value area high, value area low. So for day traders, this is what normally happens, because most of the time we tend to trade in sideways. Bitcoin or assets trade sideways until, you know, there's a push to either side. But you'll tend to see Bitcoin, like, look at this. Bitcoin is basically for the last 4 days been in this sideways consolidation, and this is actually quite normal. Like, this is normal, but you have very good traders that'll just trade this range, short up here, long here, short up here, like they just keep scalping it. So in a day, you know, a day trader will probably take 3 trades here, right? They would have shorted here if they saw resistance from a previous day. It was a point of control of one of the earlier days. They would have shorted up here. They would have longed up here because of the previous day's sort of trading. They probably had saw that this was the value area low. Like if I do a fixed range, if I do a bar, so a larger version, okay, we can see here that we had the value area low at 22,278, but we had many wicks go below that. So let's that's not a good example because that wasn't respected. But we can see here, so during this day, we blew up, came back down, and then we stayed in this range. We came up to the value area high. We're obviously a little bit short from here, but it was still, you know, the whole day was forming. So we were yet to see the range. Hit the range high, hit the range low, and then people just make easy money. Look here, you short the swing value pattern of this, this high, you come back down, you long the swing value pattern of this low, boom, come back high, short. So it can be quite easy for day traders, but you do have to pay attention. You do have to use these value areas to get a sense of what the price is going to do and take easy shorts and easy longs. All right, I think I've blabbed on long enough. Hopefully you guys learned a lot. It was great talking to you guys. If you have any questions, feel free to drop a comment below. I'm happy to reply to them if I check them out. And thank you for watching. Make sure you like, subscribe, turn on all notifications, and I'll see you on my next video. Bye for now.